Oh dear Lord Jesus, this ain't happening, man. This can't be happening, man. This isn't happening.
Pending cryptocurrency legislation list highlights high-impact areas. With the advent of blockchain and cryptocurrencies disrupting our financial systems, regulators are forced to investigate the utility of this technology and propose new rules to ensure that citizens are able to receive the maximum benefit from using decentralized digital assets while minimizing any of its potentially harmful effects. Crypto Focus. Coin Center recently published a federal cryptocurrency bill tracker. It lists the introduction and current status of all U.S. federal legislation that mentions or relate to cryptocurrencies. Through each crypto bill proposed, we are able to better understand how the U.S. government views cryptocurrencies, where they think it can provide benefits to citizens, and where it could be most harmful. Here are some of the key takeaways from the list. Low-income lending and investing opportunities a priority for Black and Community Bank. Members of the government are starting to recognize the utility of cryptocurrencies for lending and making crowd investments. On January 3, 2019, Bill H.R. 41, titled Rescue Act for Black and Community Banks, was released. Its stated purpose is to provide regulatory relief for Black and community banks, to codify the Minority Bank Deposit Program, and for other purposes. The Minority Bank Deposit Program, MBDP, is a voluntary program that encourages credit unions, as well as female and minority-owned banks, to become depositories and financial agents for low-income communities. The initiative was created by the U.S. Department of Treasury and is meant to make banking services more accessible to the most underserved communities. Although not stated explicitly, codifying the MBDP program could imply the use of a blockchain ledger and smart contract system to record and deploy short-term loans based on a predefined set of rules written in code. Such a system would be a huge boost to communities that are underbanked and often targeted by payday lending services. Payday lending is a $40 billion industry that makes its money by preying on those desperate for short-term capital. Loan interest rates can start out at a modest 10 to 15%, but can easily jump to 300% once borrowers become trapped in a debt cycle of continuous borrowing to keep up with bills and everyday expenses. According to Pew Trust's research, 12 million Americans currently use payday lending services, 12% of whom are African Americans. Smart contract-based lending would be a highly efficient and cost-effective alternative for both the borrowers and lenders. Within the same bill, it mentions that the Comptroller General of the U.S. intends to conduct a study on blockchain technology and how it could be used to enable lower-income individuals to invest in startups and other crowd-funded companies. Crowd investing has long been thought of as a way to give businesses who aren't a right fit for bank loans or VC capital a chance to raise money, while opening opportunities for regular people to grow their wealth through access to more investment opportunities. Blockchain technology would give investors the transparency they need to feel safe about where their money is going, especially if rules were embedded into smart contracts to ensure that funds were only allocated when certain business milestones were achieved. Cryptocurrencies still viewed as nefarious tools. The vast majority of bills proposed center around the topic of consumer protection and national security. While the government sees some potential in using cryptocurrencies to provide financial opportunities to consumers, the main concern outlined in at least 7 of the 10 bills proposed so far were focused on preventing cryptocurrencies being used to fund terrorism, human trafficking, drug trafficking, and financial scams. One bill, H.R. 56, is called the Financial Technology Protection Act. Its stated purpose is to establish an independent financial technology task force to combat terrorism and illicit financing, and to provide rewards for information leading to convictions related to terrorist use of digital currencies. Not surprisingly, Bill H.R. 56 and Bill H.R. 502, the Fine Trafficking Act, are so far the only 2 bills to have passed the House, been received in the Senate and referred to the Committee on Homeland Security and Governmental Affairs, as well as the Committee on Banking, Housing, and Urban Affairs. This indicates preventing the potential dangers of cryptocurrencies takes precedence over promoting its many benefits. The perception regulators have about the crypto space is still very much based on what was observed between 2010 and 2013, where Bitcoin was primarily used to pay for drugs and illegal weapons in marketplaces like Silk Road. The FBI eventually shut down Silk Road in 2013, and the site's founder is currently serving a double life sentence plus 40 years without the possibility of parole. When we think about the pace in which the government conducts investigations, it makes sense that there is still a perception that Bitcoin could be used for illegal activity. After all, the FBI is only just now conducting an investigation into BitConnect, a crypto Ponzi scheme platform that launched in 2016 and shut down in December 2017. This lag in time between crimes committed and investigations occurring creates the false perception that the current crypto space is not evolving and that consumers have not learned about how to protect themselves from being victims of cryptocurrency-funded financial crimes. Crypto for fighting drug trafficking and terrorism funding. With regard to the drug and terrorism issue, a recent report by Bloomberg showed that $2 trillion worth of shady transactions still occur each year from non-cryptocurrency sources, primarily cash, but also digital money transfers from colluding banks. One of the most famous cases was the case of HSBC, which failed to accurately monitor over $670 billion in wire transfers from Mexico and $9.4 billion in purchases of U.S. currency, according to a 2012 deferred prosecution agreement with U.S. authorities. Using an elaborate system of deposits and money transfers, Mexican and Colombian drug cartels were able to launder their illicit proceeds through the bank without detection. The bank was eventually fined $1.9 billion. Cases like this should make it clear to regulators that cryptocurrencies are far from their biggest problem when it comes to shady transactions. In fact, with a better understanding of blockchain technology, regulators would know that the immutable and transparent nature of the technology actually makes it harder for shady transactions to go undetected, and that the token economic structure that most cryptocurrency networks are established under it can be leveraged to create all kinds of incentive schemes to reward users for identifying and reporting shady transactions. Hence, eliminating the need for centralized governing bodies to waste resources launching investigations, especially ones that occur years after the crime has been committed. Conclusion. Ultimately, there is something positive to be found in the efforts regulators are making to pass bills around the adoption of cryptocurrencies, as many leaders in the crypto space have been urging Congress to do for months now. However, the kind of bills being proposed indicate that there is still work to be done to educate lawmakers about how cryptocurrencies and blockchain technology can not only provide financial opportunities to everyday people, but also help solve many of the terrorism, drug trafficking and financial fraud problems that some regulators are incorrectly claiming it enables. Thanks for watching the OhioBitcoin.com Bitcoin News channel today. We appreciate you spending some of your valuable time with
5 useful ways blockchain technology can improve your business right now. If you are a business owner, you've likely had a quarter or two where you did a ton of work, served a million clients, and ended up with nothing more than a few pennies in your bank account. Don't fret though, I hear this is normal. There's a popular saying that you need to spend money to make money, and that may be true. But if you are like me, I'm sure you've wondered if success could be a bit more affordable than it currently is. Most businesses today lose money due to procedural delays, human error, and fees paid to middlemen. Can you imagine what your bank account would look like if you could speed your business up, eliminate silly mistakes, and kick those infernal middlemen to the curb? If those ideas sound like mere wishful thinking, you'll be surprised to know that they are actually quite possible. What the heck am I talking about? Making your business faster, more efficient, and more cost-effective with blockchain technology. But what is blockchain? Blockchain is a type of technology that records transactions to a digital ledger where they cannot be changed or altered. These records or blocks of information are linked using cryptography. The info on a blockchain is easily verifiable and open to the public. Blockchains are also decentralized, so the data is shared with all the computers on the network. P.S. If you've ever wondered why decentralization is so important these days, just take a look at this. A number of applications are built on the blockchain. blockchain applications provide a wide variety of solutions you need to improve your business. How can you use blockchain technology to increase your earnings? Consider the 5 ways outlined below. 1. Use smart contracts. A smart contract is a self-executing contract that has the terms of all parties written directly into the code. The code and terms of the contract exist on a decentralized blockchain network. Smart contracts ensure all parties in the agreement do what they are supposed to. These self-automated programs run without downtime and without the interference of external parties. So how does a smart contract help you get more money? Well, it ensures you get paid once you deliver on your end of the deal. Plus, if the other party backs out on short notice, your goods/services are returned to you. This means you never have to use lawyers, government officials, or other fee-charging middlemen to settle disputes. All in all, a smart contract is a fantastic tool to use when you are forced to do business with jerks, people you don't trust, or people you simply don't know. 2. Hire better people. A team is only as strong as its weakest member, and the same is true for your business. It is important to choose the right people to work with you, so that your business can grow. Hiring the right employees requires a lot of time, effort, and research. However, blockchain technology can make the job a whole lot easier. Have you ever tweaked your CV to make it a little more impressive to potential employers? If you've done it or considered doing it before, you can be sure your potential employees may think about doing the same to you. Job candidates often use Photoshop to forge impressive documents, or they may claim to be the former captain of their high school basketball team, even if they don't have a single athletic bone in their body. The main reason they do this is they know you likely won't have the time or resources to double-check their qualifications. But just imagine having access to easily verifiable records of a potential employee right at your fingertips. Academic records, extracurricular activities, past employment records, and references are all stored for you on an unmodifiable digital ledger. If you encounter an impressive candidate, you can quickly confirm the authenticity of his or her qualifications and hire the individual on the spot. Having trustworthy data that is readily available reduces the length of the hiring process and helps you hire the right people to improve your business. 3. Make faster, cheaper payments. Blockchain had its start in Bitcoin, so it shouldn't be a surprise that Bitcoin and other cryptocurrencies can be used to pay your employees. Making crypto payments on the blockchain is especially beneficial when you have international and/or remote workers. Blockchain allows you to compensate your workers in less than an hour without the outrageous transaction fees associated with traditional banking systems or remittance services. Paying employees using cryptocurrency may even help you save money in other ways. Having records of your transactions on the blockchain makes it easy to track your cash flow and keep track of all your payments. So you'll never overpay on your taxes and you'll have nothing to fear if the IRS comes knocking. 4. Get to know your customers better. Blockchain facilitates reliable identity management. Your customers and your employees have digital IDs that make it easy to verify their identity. If this information is stored on a blockchain network, it reduces the risk of identity theft, money laundering, fraud, and other cybersecurity concerns. As the information on the blockchain cannot be changed, it allows people to take control of their personal data. Clear transaction records also help you and your customers to see how your relationship has progressed over time. With blockchain technology, you can identify loyal customers, learn more about their spending patterns, and steadily build your customer base. 5. Improve your marketing campaigns. Good marketing is vital to every business. But with the number of businesses competing for attention today, it may be difficult to get yours to stand out to potential consumers. I'm sure you are already familiar with using social media posts, billboards in high-traffic areas, TV commercials, newspaper advertisements, and direct mailing as methods of promotion. However, blockchain may make your marketing efforts even more effective. Blockchain can be used by marketers to keep track of client information and consumer behavior. With this data, skilled marketers can craft clever campaigns that bring greater ROI. Any changes made to your campaigns or other media releases during development can also be identified with ease. If you encounter a mistake down the road, you can use the blockchain to find out who made it and when. Finally, blockchain allows marketers to verify that the traffic they attract is from real people. When your marketing stats are not inflated by bot activity, you get a much bigger bang for every buck you spend on marketing. It is evident that blockchain technology will soon take over many of the everyday processes that businesses undertake. Why not stay a step ahead and put some money in your pocket by trying it out? It is already a reliable option for a number of traditional businesses in the banking and insurance fields. Even if you are a budding entrepreneur, by harnessing the power of the blockchain you can get an immediate leg up on your competition. Liked what you just read? Do you share our vision of making life easier for people without compromising their privacy? Click the O below to clap for this piece. Share our story with people you think will benefit from it. Get the latest updates, follow our blog, Reddit, Facebook, or Twitter. We're working hard to bring you great content. If you have something you want us to write about, let us know in the comments below. Written by Demetri Thompson. Thanks for watching the OhioBitcoin.com Bitcoin News channel today. We appreciate you spending some of your valuable time with us. Disclaimer: price articles and markets updates are intended for informational purposes.
Bitcoin is nothing more than bovine excrement, Berkeley researcher. Move over, Jamie Dimon, because there's a new contender for the coveted title of King Bear of the Bitcoin bashing brigade. Technologist Nicholas Weaver. Technologist Nicholas Weaver rants against Bitcoin. While he might not have the mainstream name recognition of Jamie Dimon, or Warren Buffett, or even Ariel Rabini, Weaver, a senior researcher at the International Computer Science Institute at Berkeley, has proven that he can sling Bitcoin barbs like the best of them. Nicholas Weaver is a contender to lead the Bitcoin bashing brigade. Source: ICSI Berkeley. Speaking during the latest episode of Bloomberg's Odd Lots podcast, Weaver, who previously said that blockchain and cryptocurrency should both be burned with fire, wasted no time in heaping more insults on the nascent asset class, alleging that anyone with any actual technical knowledge immediately understood that Bitcoin was bovine excrement when it first appeared on their radars in the early 2010s. So what happened when the cryptocurrencies first came out in 2010 and 2011 is most people who looked at it with technical understanding went, "Oh, this is bovine excrement," and walked away. Why is Bitcoin just bovine excrement? Because while it might use cryptography, it utterly fails as a currency, leaving proponents with very few non-criminal uses. The big fatal flaw is that it doesn't actually work as currency. If you can't use it as a competitor to all the other actual digital currency systems we have, like, PayPal. All of these payment systems are vastly more efficient than the cryptocurrencies, unless you're interested in criminal activity. 3 reasons cryptocurrency fails as money plus a bonus. Berkeley's Nicholas Weaver is not optimistic that Bitcoin will ever develop into a reliable payment tool for anyone other than criminal enterprises. Source: Shutterstock. Weaver says that cryptocurrency fails as money for 3 reasons. First, Bitcoin's immutability makes it difficult to acquire since sellers must take enhanced precautions to avoid chargebacks like the one that grifted $75,000 from Apple co-founder Steve Wozniak. Second, cryptocurrency is difficult for the average person to hold securely, as demonstrated by the prevalence of hacks targeting both crypto exchanges and individual wallets. Finally, Weaver alleges that cryptocurrency is far too difficult to spend. The dirty little secret is the merchants who say they accept cryptocurrency aren't actually accepting cryptocurrency, he said, noting that they instead use third-party conversion services such as BitPay or Coinbase Commerce. Unable to stop himself at 3, Weaver further indicted cryptocurrencies such as Bitcoin for operating on a deflationary model, which incentivizes saving and punishes spenders. Note, not every cryptocurrency is deflationary. As we remember our economic history from the Great Depression, the only thing worse than inflation is deflation, he said. These cryptocurrencies are supposed to be deflationary, which means if you, say, buy a pizza back in 2010, you end up dining on regret when the price surges as the result of a speculative bubble. 2 ways to burn Bitcoin with fire. Nicholas Weaver says that the US government could destroy Bitcoin by taking down stablecoin issuer Tether. Source: Shutterstock. Goated by Bloomberg hosts Joe Weisenthal and Tracy Alloway, Weaver concluded the podcast by wargaming the 2 scenarios that could lead to the collapse of the cryptocurrency sector, or in his words, burn the system with fire. The first is that the US government could take down Tether, the company behind the USDT stablecoin that serves as a proxy for the US dollar on the vast majority of cryptocurrency exchanges. The second is that proof of work, POW, cryptocurrencies like Bitcoin could enter a death spiral. He explained, there's 2 things that can really burn the system with fire. The first is the federal government getting their act together and going after this cryptocurrency called Tether. If Tether is destroyed, that removes the entire Bitcoin exchange ecology. Number 2 is a death spiral situation, he said, warning that if the Bitcoin price falls too precipitously, then the network would lose its security as unprofitable miners flip off their machines. Still, Weaver takes comfort in the fact that, if nothing else, at least cryptocurrency is comedy gold. Thanks for watching the OhioBitcoin.com Bitcoin News channel today. We sincerely appreciate you spending some of your valuable time with us. Disclaimer: price articles and markets updates are intended for informational purposes only and should not to be considered as trading advice. Neither OhioBitcoin.com nor the author is responsible for any losses or gains, as the ultimate decision to conduct a trade is made by the reader. Always remember that only those in possession of their own private keys are in control of their own Bitcoin. If you enjoy this type of content, please smash the like and subscribe buttons below. It helps us to get more views and continues to spread the word about Bitcoin BTC. Thanks again. See you with more Bitcoin headline news and analysis soon.
You son of a bitch.
Ethereum ETN launches $80 smartphone that mines crypto. Blockchain startup Ethereum has just launched a dirt cheap Android smartphone that mines cryptocurrency. Announcing the news on Monday, the firm said its new M1 is a Google Mobile Services GMS-certified smartphone that comes with a cloud mining technology integration, enabling users to earn crypto through an app. The $80 smartphone, however, will at launch mine only Ethereum's native token ETN, with a claimed monthly return of up to $3. Once set up, mining can be carried out offline, the firm said. The ETN tokens earned by users can be utilized to pay for services such as mobile top-ups, online services and shopping. It's also tradable on exchanges, with one ETN worth around $0.0073 at time of writing, according to data from CoinMarketCap. It has a market capitalization of around $65 million currently. The M1 offers 4G, 8GB 32GB of storage and 2 SIM slots, and is powered by a quad-core 1.3 GHz processor. Cameras are a less than overwhelming 5 megapixels rear and 2 megapixels front. The device is apparently being offered at the price of a conditioned handset because Ethereum is looking to target developing countries and grow the adoption of blockchain and cryptocurrencies. In some countries, the firm may price the phone even lower, at around $60. To start with, we will be selling the M1 in South Africa, as this is our first launch market, Nick Cook, head of operations at Ethereum, told CoinDesk. The M1 will be sold through local vendors. Cook further said that the device will also be sold over Amazon in South Africa in the coming weeks. Electroneum's founder and CEO, Richard Els, said in a separate statement shared with CoinDesk, "South Africa was an obvious choice for us. We carried out a large survey in the country and found that 97% of those who responded said they would like to use ETN to pay for mobile airtime and data." Electroneum has partnered with cybersecurity firm HackerOne, which is also used by the U.S. Department of Defense to secure its network, Cook told CoinDesk. M1 image courtesy of Electroneum. Thanks for watching the OhioBitcoin.com Bitcoin News channel today. We appreciate you spending some of your valuable time with us. Disclaimer: price articles and markets updates are intended for informational purposes only and should not to be considered as trading advice. Neither OhioBitcoin.com nor the author is responsible for any losses or gains, as the ultimate decision to conduct a trade is made by the reader. Always remember that only those in possession of their own private keys are in control of their own money. If you enjoy this type of content, please smash the like and subscribe buttons below. It helps us to get more views. Thanks again. See you with more Bitcoin headline news and analysis soon.
Is $1 million for Bitcoin real? IBM's VP of Blockchain Jesse Lund thinks it is. Bitcoin, BTC, continues to be the darling of global investors despite the recent crypto winter. Recently, Jesse Lund, VP of Blockchain and Digital Currencies at IBM, showered praises on Bitcoin. Mr. Lund remains ultra bullish on the future of Bitcoin in the long term. In a recent interview published by Finder.com on YouTube, Mr. Lund says that the Bitcoin price will eventually reach $1 million in the long term. He also went to say that higher the price of the crypto asset, higher will be its utility. Thus, Mr. Lund believes that, if we focus more on the utility of the crypto token, higher will be its demand. This will automatically drive the price of the crypto asset northwards, he says. If the price of Bitcoin were higher, there would be more liquidity on the network. We could be having a really different discussion with banks right now, he says. Embedded content. Mr. Lund notes that if Bitcoin is to touch $1 million price, then Satoshi is on value parity with the US penny. In this case, the whole network will have a whopping $20 trillion liquidity. He also believes that this liquidity is enough to change the structure of corporate payments. While commenting on the Bitcoin, BTC, price by the year end, Lund said that he sees it going to at least $5,000. IBM's close association with blockchain and crypto industry. Over the last few years, IBM is aggressively working on new blockchain projects working on different platforms. The tech giant has also developed its own cross-border payment network, Blockchain Worldwire, BWW. During his recent interview, Lund spoke about their partnership with Stellar, XLM, and use of the XLM cryptocurrency in BWW blockchain network. Currently, IBM uses the XLM crypto token on the BWW network to pay the transaction fees as well as an intermediate currency. Lund also opened up on the possibility of working with other digital assets. He said, there should be an ecosystem of a variety of digital assets that provide settlement instruments that enable these cross-border payments, and the participants in the network should be able to choose and negotiate their choices in real time. He further added that it could be Ripple, it could be XRP even, it could be Bitcoin, but it would also probably include other instruments, like stablecoins, and even eventually soon, hopefully, central bank-issued digital currencies. However, IBM's BWW payment network is different from the Ripple net in a way that the tech giant doesn't have a native crypto token. IBM is already working with R3 to create cross-border payment solutions using different digital assets. Earlier this month, IBM also released its blockchain network for use in Melbourne, Australia. Along with Mr. Lund, there are several popular analysts who continue to stay bullish on Bitcoin's future price. Mark Jeffrey, a longtime Bitcoin proponent and author of Bitcoin Explained, simply said that Bitcoin will reach $250K. Circle CEO Jeremy Allaire also spoke that Bitcoin will continue to rise in the upcoming years without mentioning any specific target. Taking a modest target, crypto bull Tom Lee explained that the fair value of Bitcoin is at least $13,800. Thanks for watching. Is Bitcoin headed for $1 million United States dollars? Let us know your thoughts in the comments below.
Becoming a little bit wealthy, how to save for your retirement. The bad news is that almost half of Americans approaching retirement have nothing saved in a 401k or other individual account. The good news is that Doug Lynam offers sound, doable financial advice so that anyone can live comfortably and enjoy their golden years. Doug was a Benedictine monk for 20 years and is now Director of Educator Retirement Services for an asset management firm in Santa Fe, New Mexico. Doug is also a self-proclaimed suffering prevention specialist. He will be the first to let you know that prayer may help your soul, but not your savings account. Get the full Seth Klarman series in PDF. Get the entire 10-part series on Seth Klarman in PDF. Save it to your desktop, read it on your tablet, or email to your colleagues. Q4 hedge fund letters, conference, scoops, etc. Doug has the following advice for older people who have nothing saved: build a workable budget to reduce expenses, clear up debt, increase their savings rate, select better retirement investments, or start investing now. Try to buy a modest home so that living costs go down as they age. Consider relocating to a less expensive city, if possible. Stop supporting adult children, if possible. Put your own oxygen mask on first before you assist others. And for younger people who'd like to avoid this situation, remember that the holy trinity of finance is 1. Earning, 2. Saving, 3. Investing ethically. You must win at all three to build a sustainable retirement. Doug points out, too many people only focus on earning money. Even if you have a high income, if you don't save and invest, you'll always be broke, which will increase your suffering and your family's suffering. Doug offers advice about saving for retirement or how anyone can get on the road to becoming a little bit wealthy. His book, From Monk to Money Manager, a former monk's financial guide to becoming a little bit wealthy and why that's okay, Thomas Nelson, March 26, 2019, was just released. Doug's goal is to help as many people as possible manage their money effectively, according to their highest values. Money management, done correctly, is a spiritual practice.
Tron price fights to survive outrage following Justin Sun's botched Tesla giveaway. Not all of the top markets tend to follow Bitcoin's bearish price trend at this time. That in itself is a good sign, primarily because all projects have their own individual value and worth. Despite facing a ton of controversy, the Tron price is still rising. Given how irate a lot of community members are over Justin Sun's botched Tesla giveaway, that situation may change sooner rather than later. Tron price momentum can sour at any time. Although the actions of Justin Sun and the value of the Tron network should be seen as two separate things, that is not necessarily the case for everyone. In fact, it would appear the community is starting to turn its back on both Sun and Tron because of the recent Tesla giveaway shit show. Cryptocurrency community members can be a feisty bunch, although drawing a winner, sharing it in a video, then pulling the video offline and posting a new random draw video will not bode well for the public image of Tron either. Over the past 24 hours, the Tron price has gained 1.35% to rise to $0.02354. There is also a near 2% improvement in TRX/BTC, pushing the ratio to 582 Satoshi. It still seems unlikely a push to 600 Satoshi will occur over the weekend, although one never knows what the weekend will bring. There is also more than sufficient trading volume to keep things going right now, although it remains to be seen how dire things will get due to this community outrage. Maintaining the $11 rank in market cap is also a big challenge, it would seem. The big news is how Justin Sun recently confirmed he would live stream the Tesla contest winner. While that video was indeed uploaded to the internet, it was also rendered invalid by Sun himself due to a Twitter glitch. A bit unusual, especially when considering how the video can be seen on Twitter just fine. As such, the person who effectively won the giveaway will not receive his prize, which has created a lot of bad blood between Tron, Sun, and the crypto community. Stay tuned for the live streaming to pick the winner. Number Tron, number TRX, number BTT, number blockchain, https tco/jcavl1sion Justin Sun at Justin Suntron, March the 29th, 2019. It would appear this odd way of dealing with the crucial giveaway has already created a lot of bad blood. Splash, for example, wonders if anyone is even surprised by this scam. The answer to that question seems rather self-explanatory, although it should not serve as a platform to promote both EOS and Cardano in the process. Even so, the way this giveaway was conducted tends to raise a lot of new questions which do not bode well for the Tron project as a whole. Once a level of trust is thrown out of the window, it can never be regained in full. Is anyone actually surprised with the TRX competition scam? Tron is overhyped and overvalued, built on false hype and lies. EOS and Cardano are far superior tech, and doing it organically without all the bullshit. So no surprise the Tesla comp is full of lies too. Number TRX splash at SPLASH 77,059,410, March the 29th, 2019. CryptoGunby is already past the point of bashing both Tron and Justin Sun over this outrageous turn of events. Instead, he took the more mature approach and removed all references regarding Tron from his Twitter profile. It will be interesting to see how this entire situation will be resolved in the near future, as there is still a chance everything will be made right. It seems unlikely at this time, but one never knows how things evolve in the cryptocurrency world. Stranger things have happened, after all. I'll leave the number TRX number Tron bashing at that. I'm so ashamed that I've taken all Tron references from my description. What a shit show. CryptoGumby at NWQLD, March the 29th, 2019. Based on all of the extracurricular activities surrounding the Tron creator, it will be interesting to see if the TRX price is affected in any way. Knowing how this particular market evolves, it seems unlikely the Tron army will let that happen. As the top markets remain bearish though, there will be some repercussions for TRX at some point down the line. This weekend may prove to be very crucial in many different ways, although the price direction remains uncertain. Disclaimer: this is not trading or investment advice. The above article is for entertainment and education purposes only. Please do your own research before purchasing or investing into any cryptocurrency. Thanks for watching the OhioBitcoin.com Bitcoin News channel today. We sincerely appreciate you spending some of your valuable time with us. Disclaimer: price articles and markets updates are intended for informational purposes only, and should not be considered as trading advice. Neither OhioBitcoin.com nor the author is responsible for any losses or gains, as the ultimate decision to conduct a trade is made by the reader. This is not trading or investment advice. This presentation is for entertainment and education purposes only. Please do your own research before purchasing or investing into any cryptocurrency. Always remember that only those in possession of their own private keys are in control of their own Bitcoin. If you enjoy this type of content, please smash the like and subscribe buttons below. It helps us to get more views and continues to spread the word about Bitcoin BTC. Thanks again. See you with more Bitcoin headline news and analysis soon.
Twitter threatens controversial Trump tweets. President Donald Trump has long been known for his colorful personality and his inclination for making highly controversial statements. This habit is finally starting to cause a stir for the top brass at Twitter. The left-leaning social media site, which has long been his favorite communication channel, wants to create a labeling policy for his tweets that violate their terms of service. Twitter will slap trigger warnings on Trump tweets. The issue was brought up at a recent Washington Post event, where Vijaya Gadde, Twitter's head of legal policy and trust and safety, was asked whether or not Trump had the license to say anything he wants on the platform. Gadde said that politicians are given a certain amount of leeway on Twitter because their comments are often newsworthy and thus crucial for the public to see, even if they violate the service's rules. However, Gadde argued that Trump should not be completely unfettered. She explained, an example of a tweet Trump couldn't make would be a direct violent threat against an individual that we wouldn't leave on the platform because of the danger it poses to that individual. So it was indeed just proven in court papers, last in his class, Annapolis, John McCain, that sent the fake dossier to the FBI and media hoping to have it printed before the election. He and the Dems, working together, failed, as usual. Even the fake news refused this garbage. Donald J. Trump, at @RealDonaldTrump, March 17, 2019. Many people cringe when they read President Trump's tweets, and for others, they believe they are in direct violation of Twitter's terms. Going forward, Gadde revealed that the social networking platform is working on creating a labeling system for the tweets of politicians. Speaking about the thought behind this idea, Gadde said Twitter wants to be balanced in its approach. So it was indeed just proven in court papers, last in his class, Annapolis, John McCain, that sent the fake dossier to the FBI and media hoping to have it printed before the election. He and the Dems, working together, failed, as usual. Even the fake news refused this garbage. Donald J. Trump, at @RealDonaldTrump, March 17, 2019. How can we put some context around it so people are aware that that content is actually a violation of our rules and it is serving a particular purpose in remaining on the platform? The microblogging platform is trying to create a compromise between the need to keep Trump's off-defensive tweets coming without upsetting too many Twitter users and sending the message that it's perfectly fine to violate the platform's rules. Trump Tweet Hall of Fame. Left-leaning Twitter might not approve of many of Donald Trump's tweets, but he's also responsible for cementing the platform's central role in the public square. Source: Twitter. Even though many Trump fanboys would undoubtedly like the president to spew whatever he wants online, it is hard to argue with Twitter for wanting to at the very least provide people with some warning when he goes off the rails. Just look at how he talks about his political allies, much less his enemies. Truly weird. Senator Rand Paul of Kentucky reminds me of a spoiled brat without a properly functioning brain. He was terrible at debate. At Frank Luntz is a low-class slob who came to my office looking for consulting work, and I had zero interest. Now he picks anti-Trump panels. Twitter's complicated relationship with Donald Trump. It is clear that Trump has a pattern of making derogatory, derisive comments. He likes to target anyone he views as a threat. Many would call this behavior narcissistic. Supporters call it a great example of a man exercising his First Amendment rights. Kevin Corke, at Fox News. Don't forget, Michael Cohen has already been convicted of perjury and fraud, and as recently as this week, the Wall Street Journal has suggested that he may have stolen tens of thousands of dollars, lying to reduce his jail time. Watch father-in-law, Donald J. Trump, at @RealDonaldTrump, January 18, 2019. Still, Twitter owes Trump a significant debt, even if, and perhaps because, his comments are often controversial. In 2015, when President Trump announced his candidacy, Twitter experienced a surge in growth, particularly as the election drew closer. The company's monthly active user, MOUS, count spiked from 318 million to 327 million MOUS as the president-elect made Twitter his preferred medium of communication with the American public.
What I've learned by talking to normal people about Bitcoin. Crypto, from the outside looking in. When I asked my friend Liz, a public school teacher living in Louisiana, and my very best friend since junior high, what she thought young women might need to embrace Bitcoin, she said, "I see Bitcoin in the headlines and occasionally on Facebook. But even I don't really get it, and it's not clear why I should care about it. So, I'm not sure why my students should either." This sentiment is echoed by nearly every normal person that I speak to who doesn't work in technology or finance. Yes, I'm making an incredibly lazy distinction in calling these people normal, because of course they aren't normal. But for right now this word will have to suffice in capturing this impossibly large, diverse and multifaceted population of Americans who are currently on the outside of the crypto movement. Crypto Twitter, startup founders, VCs, tech journalists, these are the insiders. Their vantage point is radically different. Their point of view is exceptional. These communities contain individuals whose credentials can be extremely impressive, and so they dominate the discourse. Yet their understanding of crypto, its potential, and where it's going feels warped compared with what the rest of America thinks. According to them, the world is primed for crypto domination. Maybe it's not going to happen this year, but in the meantime we're all running nodes and passing the lightning torch and pumped about BAKKT. And yes, there have been hand slaps for a lack of diversity and representation, but there are all-women blockchain panels now, okay? For the past year or so, I've been trying to understand, as deeply and with as much compassion as possible, what it is that people outside of this echo chamber think and feel about crypto. I'm doing this because I believe in the echo chamber and because I'm committed to the vision of this revolution in money. And I want it for everyone. But in order to achieve that goal, I wanted to first just sit back and listen for a minute. So, here are some things I've heard a lot from people who don't have any Bitcoin or crypto assets. I won't be offering any refutations to these comments, as they are abundant and often obvious. I also don't want to make wrong the people who are feeling these things. I can't afford Bitcoin. They see the price of one Bitcoin trot out in the headlines and assume that they need to buy a whole Bitcoin in order to own any at all. This is such a common sentiment, and I've heard it said by very smart people. Bitcoin's divisibility isn't apparent, and many people aren't even making it to Google to ask where or how to buy as a result. Do we move to bits or Satoshi? What's the best way to position this new money so that it is familiar but without all the old money baggage? I'm intimidated by it. Oh, no, I'm not a technical person. This sentiment is rooted in the feeling that this isn't a thing for them. This is for smart people, rich people, tech people, finance people. What's the benefit for me to put the work in to figure this thing out when it scares me or makes me feel out of touch? The feeling here is that the upside isn't clear and that the cards are probably stacked against someone like them. Anyway, my personal Bitcoin journey had a false start in 2013 when I first heard of it, but couldn't get my head around the concept of mining and couldn't move past it. I abandoned ship because I had frustrated too many kind people with my naive questions about math puzzles. How do we strike a balance between driving literacy and needing to show people what's under the hood? People get on airplanes every day without understanding how they fly. Is that how we should treat these technologies as well? I tried to buy some, but I got confused and overwhelmed. Why do I need to give my social security number? What if I lose my password? Will my bank close my account if they see me buying Bitcoin? My accountant told me to not buy any. Related, I don't know where to start. Onboarding is a well-documented challenge and remains a significant hurdle well into 2019. An uncertain regulatory landscape is no doubt contributing to this, to the frustration of many small crypto companies, mine included. As issues in compliance, KIC AML, tax law, etc. remain unsolved, it's at the expense of our nation's underbanked, who arguably need this movement the most. Cool, sounds like Venmo. Peer-to-peer payments already exist in the minds of many. PayPal and Venmo are frictionless for their purposes. The subtext is that their money, and its value, has always felt safe, so these digital financial platforms feel safe too. Maybe the people that I've been speaking to don't understand how their money moves, or maybe they don't care, but the idea of controlling their funds is not one that I find resonates with Americans very often. Why is this better money when my money is fine? Taylor Monahan unpacked this idea with such clarity when she tweeted, "Decentralization is not the value proposition. Ryan Radloff wrote an incredible article exploring this idea of a money evolution versus a money revolution and goes into far more detail on this topic. It is definitely worth the read. 3. Bitcoin is for criminals. Depending on the day, the pendulum of the Bitcoin brand swings from criminal hacker masterminds to tacky nouveau riche. Illustrating the latter, Kyle Chucker recently wrote, "Cryptocurrency has evolved from a financial tool into something more akin to a Louis Vuitton suitcase, a Cartier watch, or a Jeff Koons sculpture." The last bull run flushed out much of the talk about Silk Road, but the unsavory association still remains a deterrent for many who want a very well-lit path for their money. What are the values that this movement wants associated with its brand, and what will it take for them to be realized? Bitcoin isn't stable enough, it's crashing, right? Volatility makes for a great headline. Bitcoin schadenfreude is so tasty. Of course, price action has both an enticing and chilling effect, depending on the direction, but the preoccupation comes at a cost. Boosting stories about utility is critical in moments of both crisis and joy. How do we make crypto centered so that we can move away from speculation and toward benefits? I know Jack Dorsey seems to be thinking a lot about this as well. Blockchain? Tunes out, nope, I'm good on database chat, thanks. Bitcoin represents an incredible opportunity for a more equitable and just financial system. Yet making the space feel more inclusive is no small task. Coinbase and Cash App are both doing amazing things for accessibility, but there is still an astonishing amount of work to be done and a continent's worth of land to cover if we want the outsiders on the inside on this movement as well. My opinion is that if we don't address the issues repelling the people that need crypto the most, we will have squandered the opportunity of a lifetime. My company, Gracious, is focused on driving education and adoption amongst one segment of this population, young women and teens. We are taking stock of all of the questions I laid out here and more, like what would it need to look like for more young women to feel safe exploring and experimenting with crypto. We'll keep listening, and please get in touch if you are thinking about these same themes.
Why Bitcoin is incomparable to history's famous bubbles. The rundown. Bitcoin economist Ethereum Altcoin says that nothing has ever risen as fast and as much as Bitcoin price, which makes it incomparable even to the greatest bubbles in history. Bitcoin is a completely new animal. Bitcoin economist and author of the Bitcoin Standard, Ethereum Altcoin, recently shared his views on whether the world's most popular cryptocurrency can be compared to history's famous bubbles. Paul Krugman, Jamie Dimon, Warren Buffett and other critics often refer to Bitcoin as a bubble, particularly as BTC United States dollar price has dropped from nearly $20,000 in December 2017 to around $4,000 today. But comparing it to historic stock market crashes is comparing apples and oranges, argues Amos. Bitcoin is a completely new animal, different from all before it, he says. Your old toolbox for analyzing bubbles, currencies, and stocks doesn't work on Bitcoin. It is these outdated tools that prevented the likes of Buffett from missing out on one of the best investment opportunities in history. Even the most robust stocks today, such as Amazon, AMCN, have been outperformed by the digital currency, even at today's $4,000 price. What's more is that after every time the bubble popped, it has come back even stronger. In fact, there have been at least 580+% crashes over the past decade. Amos notes Bitcoin appreciated to 200 million% of its value in 9 years, then crashed back down all the way to around a 30 million% rise. In other words, had you bought $100 worth of Bitcoin in 2009, you would have about $8 million today. Bitcoin incomparable to history's famous bubbles. The picture also looks different when comparing Bitcoin against history's famous bubbles. It has often been compared to tulips in the media with every drop in Bitcoin price. But this comparison is widely inaccurate, just like the common misconceptions about tulip mania as a whole, because BTC price posts a lower high after every crash. No coiner's favorite bubble, Dutch tulips, lasted for just over 2 years, in which the price appreciated around 60-fold, then crashed lower than its original price, explains Amos. It also goes without saying that while Bitcoin is the world's first, borderless, decentralized, neutral money that enables anyone to send millions for pennies, the other is a flower. The rate and scale of valuations is another factor making Bitcoin nothing like the 2008 housing bubble, for example, when housing prices tripled in 2 decades and then lost around 40% within only a few years. The famous housing bubble saw housing prices triple in around 20 years and then lose around 40% over a few years. Pic.twitter.com JB9QKJJKBX. Ethereum Amos, at Ethereum, March 24, 2019. Then there's the 1929 stock market bubble that rose 6-folds during the Roaring Twenties. The subsequent crash saw prices return to their original price. Meanwhile, BTC United States dollar is still 10 times greater than its pre-bubble price of around $400 in 2016. Amos says, Bitcoin is not only incomparable to bubbles, its fast rise is also incomparable to the most successful companies and innovators. As far as I can tell, nothing has ever risen as fast and as much as Bitcoin has risen. Bitcoin self-corrects to suck up fiat. So how did Bitcoin manage to rise so much and so fast in such a short time span? The secret lies in its design. Namely, the inelastic supply of 21 million Bitcoin, a number set in digital stone, making it the hardest form of money that ever existed. What's more is that unlike central banks, the supply, mining, of Bitcoin is programmed to grow at a predetermined rate, up to 21 million. This makes it the most predictable asset that ever existed. Not only does everyone know how many Bitcoins will exist 10 or even 100 years from now, but this data is also transparent and verifiable. But Amos notes another important feature that plays an important role in Bitcoin economics: the mining difficulty adjustment. My explanation for this rise is that Bitcoin's difficulty adjustment makes it a truly unique monetary asset built to rise fast, he says. Is covered by Bitcoinist. The difficulty adjustment acts as a counterbalance to fluctuations in Bitcoin hash rate or computing power of the network that can with the spot price. Amos notes that the difference between Bitcoin and traditional money is that the latter is linear, resulting in boom and bust cycles. The former, however, is a positive feedback loop that strengthens the network over time even with erratic price swings. This makes Bitcoin completely unique as it does not behave like a traditional asset whose production depends on supply and demand. It's the world's first self-correcting asset that keeps the most efficient miners profitable regardless of market conditions, while siphoning off more and more fiat money by design. Simply put, Bitcoin is not the bubble, it's the pin. Do you agree that BTC is not like other historic famous bubbles? Share your thoughts below. Thanks for watching the OhioBitcoin.com Bitcoin news channel today. We sincerely appreciate you spending some of your valuable time with us. Disclaimer: price articles and markets updates are intended for informational purposes only and should not be considered as trading advice. Neither OhioBitcoin.com nor the author is responsible for any losses or gains, as the ultimate decision to conduct a trade is made by the reader. Always remember that only those in possession of their own private keys are in control of their own money. If you enjoy this type of content, please smash the like and subscribe buttons below. It helps us to get more views and continues to spread the word about Bitcoin BTC. Thanks again. See you with more Bitcoin headline news and analysis soon.
The 6 biggest misconceptions about Bitcoin and cryptocurrency. From scaling to securities, the environment and the SEC, here's what you need to know. So much has been said about Bitcoin, Ethereum, cryptocurrency, and blockchain over the course of the past few years that it's almost impossible to keep up with what's fact, opinion, or a mixture of both. The blockchain industry moves fast, is always in flux, there's so much at stake, and we're still building a collective understanding between the vast and global spectrum of players involved. Further, in the digital media landscape in general, and specifically in the realm of cryptocurrency and blockchain media, there's a trend towards sensationalism that makes gaining a nuanced understanding of important issues something of a challenge. As the teams building out the infrastructure of a blockchain future work towards CryptoSpring, and the next phase of blockchain development comes into view, a few fallacies linger on from blockchain's salad days that are worth addressing. Some views are held by the general public, while others are more commonly uttered in the crypto sphere. But here are the 6 biggest misconceptions about blockchain and cryptocurrency right now, and what's being done that proves them wrong. Cryptocurrency mining is bad for the environment. By now, you're familiar with a popular narrative that often arises when discussing blockchain or cryptocurrency, that mining Bitcoin via proof-of-work algorithms consumes more energy than insert emerging economy nation and is contributing to the environmental downfall of the Earth. There's just one problem with these gleefully apocalyptic appraisals: all of the data upon which the entirety of this alarmist coverage is based was whittled up by an ethically suspect lone blogger who estimated his numbers, flubbed his methodology, and completely overlooked fundamental aspects of the issue at hand. A deep dive in Hacker Noon by Robert Sherritt lays out just how badly your most trusted news sources got this in an excellent takedown. The reports of Bitcoin environmental damage are garbage. It's a must-read. A 2018 report by the World Economic Forum even identified 65 use cases for blockchain technology that will help the planet in the fight for environmentalism. Projects like the Bounty for Basura are creating new models for sustainability with blockchain. And as Ethereum development continues towards a proof-of-stake model that is far more energy efficient and environmentally friendly than the proof-of-work models that dominate blockchain technologies today, we are moving towards a future where this issue will diminish. Bitcoin is cryptocurrency is blockchain. If you're reading this, the likelihood is that you've explained your interest in blockchain tech to someone, only to receive a blank stare in return until you drop the other B word, Bitcoin. Although trends in this regard are moving fast in the right direction, many people still equate blockchain with cryptocurrency and cryptocurrency with Bitcoin. However, Bitcoin's market dominance in regards to other tokens, near 100% for most of the currency's existence, sits at 50%, down from 85% less than 2 years ago and up from a recent low of 33%. Although the crypto craze of 2017 has clearly diminished, it has laid the foundation for a global ecosystem of tokens that proves that there's a lot more to cryptocurrency than just Bitcoin. It's also become evidently clear that Bitcoin and cryptocurrency are just phase one in the long arc of blockchain, and technologies like Ethereum's programmable smart contracts and decentralized apps are the future. Recent reports have indicated that Ethereum's global developer base, the builders working on the infrastructure, solutions, dApps, and protocols of the network, is more than twice that of Bitcoin, and that's a conservative estimation. Check the speeches of any of tech's greatest figures, and they'll echo the same: the projects and industries with the most developers get the best results. That's why sectors like decentralized finance, enterprise solutions, gaming, and media integrated with blockchain tech are flourishing already. Bitcoin market dominance since 2013. Notice a trend: all cryptocurrencies are securities. Some tokens and cryptocurrencies that launched through the ICO process are indeed unregistered securities. For example, tokens or cryptocurrencies that provide dividends, meet the Howey test, or share the same qualities as typical stock will result in the classification as a security. However, the emerging reality is that not all cryptocurrencies are securities. The U.S. Securities and Exchange Commission has previously stated that Ether is not a security. More recently, senior members of the SEC including Chairman Jay Clayton and Director of Corporate Finance Bill Hinman have been playing ping-pong with public statements echoing positive sentiment. Most recently in March, Clayton stated, "A digital asset may be offered and sold initially as a security because it meets the definition of an investment contract, but that designation may change over time if the digital asset later is offered and sold in such a way that it will no longer meet that definition." Regulations are notably slow to change, and while necessary to protect individuals from scams and malicious actors, it's worth noting that regulations from 1933 should be approached with a modern viewpoint. New regulations will need to take into account the various types of token models. Ethereum can't scale. Scaling a decentralized network's ability to handle transactional volume without sacrificing security or speed is undoubtedly a difficult problem to solve. However, some of the smartest minds in the world are currently working on solving scalability through Layer 1, e.g. sharding, and Layer 2, e.g. state channels, plasma, solutions. Many of those solutions will launch into reality this year, and Consensus founder Joe Lubin stated at his SXSW Interactive keynote this year that the Ethereum network, with layered solutions in play, will be able to handle millions of transactions per second within 2 years. All new technologies take time to mature and develop. Ethereum has made significant strides towards becoming the base layer protocol of Web 3.0. The overall Ethereum ecosystem continues to show remarkable signs of growth, and it is now evident that the roadmap towards scalability is clearly laid out and achievable. Cryptocurrency is only used for nefarious ends. As a private, secure, and global network for transactions, cryptocurrencies have provided incredible utility for transferring value in conflict zones, for remittances, retail payments, and yes, also for dark web transactions for illegal goods. However, Chainalysis, a leading blockchain research firm, has shown that Bitcoin is no longer the predominant currency for darknet transactions. The Global Drug Survey, GDS, similarly found that cash is still king when it comes to purchasing drugs or exchanging value for illegal services, and you'll probably find that those decrying cryptocurrency have little issues with cash. The murky techno underbelly of darknet transactions and cryptocurrencies being used for illegal purposes certainly make for great news stories, but by now, with many of the world's leading institutions like Facebook and JP Morgan on the verge of launching their own digital currencies, it's clear that the shady reputation of Bitcoin's earlier days was a factor of the technology's status on the fringes, and that we have now moved on to a more mainstream era. Tokens are useless. ICO-mania resulted in thousands of crypto and blockchain projects.
First Canadian municipality starts accepting Bitcoin for property taxes. The town of Innisfil, Ontario, will be the first municipality in Canada to accept Bitcoin in payment for property taxes. The pilot scheme will be in partnership with Toronto-based Coinberry, who simultaneously announced a new easy-to-use cryptocurrency payment solution. Tax payments in BTC trend reaches Canada. Accepting Bitcoin for payment of taxes is becoming a thing south of Canada's border. After a mad scramble a year ago to be America's crypto tax pioneer, a Florida county eventually won through to become the first U.S. locality to accept tax payments in Bitcoin. By the end of 2018, Ohio had planted their flag for Bitcoin adoption, with statewide acceptance of BTC business tax payments. Last month it looked like New Hampshire would be next to see the trend continue northwards. However, with this announcement, Innisfil has leapfrogged New Hampshire for a further hop north into Canada. Innisfil Mayor Lynn Dolan expressed her excitement at the development. "We are proud to be first in taking this bold step by offering this new exciting payment option to our residents. There's no doubt that cryptocurrency is growing in usage and popularity. By getting into this now, we are making sure our municipality is ahead of the game and signaling to the world that we truly are a future-ready and innovative community." The logistics of the scheme. From April, just in time for residents to pay their second property tax installment, they will see a new option on the town website. This will initially offer the option of paying in BTC, but may expand to include other cryptocurrencies in the future. Residents will pay taxes into the town of Innisfil's wallet using the Coinberry Pay service. Coinberry will process the funds and instantly convert them into Canadian dollars and transfer them to the town's treasury. This gives the benefit of a cryptocurrency option without leaving the town exposed to price fluctuations. Coinberry CEO and co-founder Andrei Polyakov added, "Leaders from all levels of government who are first to recognize the benefits of the new money economy will be the first to reap the rewards. We are extremely pleased at achieving a milestone in the history of adoption of cryptocurrency in Canada, from the north and south to the east and west. So with the eastern part of North America covered, will we start to see some lateral movement? Certainly it can't be too long before blockchain-friendly Wyoming joins the party, giving the movement a decent kick to the west." For perhaps the most progressive state in the U.S., it seems strange that crypto payments aren't already a thing there. And we could even see a hop eastwards all the way across the Atlantic if UK Member of Parliament Eddie Hughes has his way. The Walsall North Labour MP has called for a UK local authority to plant its own flag and start accepting Bitcoin payments for taxes. Should more municipalities accept cryptocurrencies for tax payments? Share your thoughts below. Thanks for watching the OhioBitcoin.com Bitcoin news channel today. We sincerely appreciate you spending some of your valuable time with us. Disclaimer: price articles and markets updates are intended for informational purposes only and should not be considered as trading advice. Neither OhioBitcoin.com nor the author is responsible for any losses or gains, as the ultimate decision to conduct a trade is made by the reader. This is not trading or investment advice. This presentation is for entertainment and education purposes only. Please do your own research before purchasing or investing into any cryptocurrency. Always remember that only those in possession of their own private keys are in control of their own Bitcoin. If you enjoy this type of content, please smash the like and subscribe buttons below. It helps us to get more views and continues to spread the word about Bitcoin BTC. Thanks again. See you with more Bitcoin headline news and analysis soon.
Crypto businesses being turned away from banks, report says. Crypto businesses, particularly the smaller ones, are facing the ongoing problem of banks refusing to open accounts for them, a March 3, 2019 report says. Turned away. While large financial institutions like Julius Baer and JP Morgan have jumped headfirst into the crypto market, it seems companies in the same space are struggling to accomplish one of the most basic tasks for modern businesses, opening a bank account. A March 3, 2019 report from Bloomberg reveals that many business owners of blockchain and cryptocurrency-focused companies are having a hard time getting local banks to open business accounts for them. Entrepreneurs from the United States and Europe report similar treatment from local banks, with some of the establishments including HSBC Holdings plc and, ironically, JPMorgan Chase & Company. Why the suspicions? As the report pointed out, some of these issues can be boiled down to the fact that cryptocurrency is still a new and emerging industry and thus, there is less trust from financial institutions towards it. Another industry that was reported to have been struggling with the same issue was the nascent cannabis industry. Some of these suspicions are based on genuine reasons according to Robbie Houben, a lawyer and professor at the University of Antwerp who co-authored a paper for the European Parliament on financial crime involving cryptocurrencies. According to Houben, for every legitimate entrepreneur in the crypto industry, there are many that merely want to use it as a front to evade taxes or scam people. Another contributing factor is the public attention that cryptocurrency has received for being involved in crime, such as the Silk Road incident in 2013, and also its use for bribery and kidnapping purposes. While there are many legitimate reasons for a crypto firm to open a bank account, it is a much easier task for banks to issue a blanket ban on the industry than sort on a case-by-case basis. There is also the cost issue for banks. The law requires that banks be sure of the identity of those they give accounts to, and some might feel that it isn't worth the cost to set up compliance systems. Regardless, these practices do nothing for the growth of the industry and only serve to perpetuate the idea of the crypto industry being shady. Denying basic banking is madness, impedes sector growth and forces companies to get creative to solve the problem, said Ben Sibley, the head of brokerage at NKB Group. The banks are being overly prudent. Thanks for watching the OhioBitcoin.com Bitcoin news channel today. We appreciate you spending some of your valuable time with us. Disclaimer: price articles and markets updates are intended for informational purposes only and should not to be considered as trading advice. Neither OhioBitcoin.com nor the author is responsible for any losses or gains, as the ultimate decision to conduct a trade is made by the reader. Always remember that only those in possession of their own private keys are in control of their own money. If you enjoy this type of content, please smash the like and subscribe buttons below. It helps us to get more views. Thanks again. See you with more Bitcoin headline news and analysis soon. The 6 biggest misconceptions about Bitcoin and cryptocurrency. From scaling to securities, the environment and the SEC, here's what you need to know. So much has been said about Bitcoin, Ethereum, cryptocurrency, and blockchain over the course of the past few years that it's almost impossible to keep up with what's fact, opinion, or a mixture of both. The blockchain industry moves fast, is always in flux, there's so much at stake, and we're still building a collective understanding between the vast and global spectrum of players involved. Further, in the digital media landscape in general, and specifically in the realm of cryptocurrency and blockchain media, there's a trend towards sensationalism that makes gaining a nuanced understanding of important issues something of a challenge. As the teams building out the infrastructure of a blockchain future work towards Crypto Spring, and the next phase of blockchain development comes into view, a few fallacies linger on from blockchain's salad days that are worth addressing. Some views are held by the general public, while others are more commonly uttered in the crypto sphere. But here are the 6 biggest misconceptions about blockchain and cryptocurrency right now, and what's being done that proves them wrong. Cryptocurrency mining is bad for the environment. By now, you're familiar with a popular narrative that often arises when discussing blockchain or cryptocurrency, that mining Bitcoin via proof-of-work algorithms consumes more energy than insert emerging economy nation and is contributing to the environmental downfall of the Earth. There's just one problem with these gleefully apocalyptic appraisals. All of the data upon which the entirety of this alarmist coverage is based was whittled up by an ethically suspect lone blogger who estimated his numbers, flubbed his methodology, and completely overlooked fundamental aspects of the issue at hand. A deep dive in Hacker Noon by Robert Sherritt lays out just how badly your most trusted news sources got this in an excellent takedown. The reports of Bitcoin environmental damage are garbage. It's a must-read. A 2018 report by the World Economic Forum even identified 65 use cases for blockchain technology that will help the planet in the fight for environmentalism. Projects like the Bounty for Basura are creating new models for sustainability with blockchain. And as Ethereum development continues towards a proof-of-stake model that is far more energy efficient and environmentally friendly than the proof-of-work models that dominate blockchain technologies today, we are moving towards a future where this issue will diminish. Bitcoin is cryptocurrency is blockchain. If you're reading this, the likelihood is that you've explained your interest in blockchain tech to someone, only to receive a blank stare in return until you drop the other B word, Bitcoin. Although trends in this regard are moving fast in the right direction, many people still equate blockchain with cryptocurrency and cryptocurrency with Bitcoin. However, Bitcoin's market dominance in regards to other tokens, near 100% for most of the currency's existence, sits at 50%, down from 85% less than 2 years ago and up from a recent low of 33%. Although the crypto craze of 2017 has clearly diminished, it has laid the foundation for a global ecosystem of tokens that proves that there's a lot more to cryptocurrency than just Bitcoin. It's also become evidently clear that Bitcoin and cryptocurrency are just phase 1 in the long arc of blockchain, and technologies like Ethereum's programmable smart contracts and decentralized apps are the future. Recent reports have indicated that Ethereum's global developer base, the builders working on the infrastructure, solutions, dApps, and protocols of the network, is more than twice that of Bitcoin, and that's a conservative estimation. Check the speeches of any of tech's greatest figures, and they'll echo the same. The projects and industries with the most developers get the best results. That's why sectors like decentralized finance, enterprise solutions, gaming, and media integrated with blockchain tech are flourishing already. Bitcoin market dominance since 2013. Notice a trend: all cryptocurrencies are securities. Some tokens and cryptocurrencies that launched through the ICO process are indeed unregistered securities. For example, tokens are cryptocurrencies that provide dividends, meet the Howey test, or share the same qualities as typical stock will result in the classification as a security. However, the emerging reality is that not all cryptocurrencies are securities. The U.S. Securities and Exchange Commission has previously stated that Ether is not a security. More recently, senior members of the SEC including Chairman Jay Clayton and Director of Corporate Finance Bill Hinman have been playing ping-pong with public statements echoing positive sentiment. Most recently in March, Clayton stated, "A digital asset may be offered and sold initially as a security because it meets the definition of an investment contract, but that designation may change over time if the digital asset later is offered and sold in such a way that it will no longer meet that definition." Regulations are notably slow to change, and while necessary to protect individuals from scams and malicious actors, it's worth noting that regulations from 1933 should be approached with a modern viewpoint. New regulations will need to take into account the various types of token models. Ethereum can't scale. Scaling a decentralized network's ability to handle transactional volume without sacrificing security or speed is undoubtedly a difficult problem to solve. However, some of the smartest minds in the world are currently working on solving scalability through Layer 1, e.g. sharding, and Layer 2, e.g. state channels, plasma, solutions. Many of those solutions will launch into reality this year, and Consensus founder Joe Lubin stated at his SXSW Interactive keynote this year that the Ethereum network, with layered solutions in play, will be able to handle millions of transactions per second within 2 years. All new technologies take time to mature and develop. Ethereum has made significant strides towards becoming the base layer protocol of Web 3.0. The overall Ethereum ecosystem continues to show remarkable signs of growth, and it is now evident that the roadmap towards scalability is clearly laid out and achievable. Cryptocurrency is only used for nefarious ends. As a private, secure, and global network for transactions, cryptocurrencies have provided incredible utility for transferring value in conflict zones, for remittances, retail payments, and yes, also for dark web transactions for illegal goods. However, Chainalysis, a leading blockchain research firm, has shown that Bitcoin is no longer the predominant currency for darknet transactions. The Global Drug Survey, GDS, similarly found that cash is still king when it comes to purchasing drugs or exchanging value for illegal services, and you'll probably find that those decrying cryptocurrency have little issues with cash. The murky techno underbelly of darknet transactions and cryptocurrencies being used for illegal purposes certainly make for great news stories, but by now, with many of the world's leading institutions like Facebook and JP Morgan on the verge of launching their own digital currencies, it's clear that the shady reputation of Bitcoin's earlier days was a factor of the technology's status on the fringes, and that we have now moved on to a more mainstream era. Tokens are useless. ICO-mania resulted in thousands of crypto and blockchain projects.
Ernst & Young rolls out cryptocurrency reporting tool for accounting, taxes. One of the top 4 auditing giants, Ernst & Young LLP, rolled out a cryptocurrency reporting tool for accounting and tax purposes, according to a company press release published on March 4. Primarily meant for the calculation of taxes on cryptocurrency transactions, the tool is called the Crypto Asset Accounting and Tax Tool Cant. The tool will be rolled out in the United States prior to its introduction in other markets and is an effort by the company to boost its blockchain-related services. The company rolled out Cant owing to the massive increase in cryptocurrency investments by its clients in the recent years and the rise in institutional interest. Further, the press release stated that the tool will be offered to institutional and individual clients who indulge in cryptocurrency trading. Marna Ricker, America's Vice Chair of Tax Services, said, "We are excited to offer an innovative technology specifically to address our clients' needs in the crypto asset space. Cant will allow users to pool all their transaction-level information from major exchanges and gather data from different sources to automatically produce reports, allowing simpler IRS tax returns pertaining to cryptocurrencies." Chirag Patel, a Foundry leader, said, "Cant is a timely addition to our expanding portfolio of successful new digital businesses at the Foundry." The service will be accessible to the auditor's high-net-worth clients through the Private Client Services practice. Michael Meisler, partner and a global blockchain tax leader, stated, "Cant is the hallmark of our efforts in crypto assets and blockchain from a tax perspective globally, and we will continue to work hard to make it the product of choice for clients." Currently, Ohio is the only U.S. state that allows businesses within its borders to pay their taxes in Bitcoin BTC. State officials are looking to expand this offering to include individual taxpayers soon. Thanks for watching the OhioBitcoin.com Bitcoin News channel today. We appreciate you spending some of your valuable time with us. Disclaimer: price articles and markets updates are intended for informational purposes only and should not be considered as trading advice. Neither OhioBitcoin.com nor the author is responsible for any losses or gains, as the ultimate decision to conduct a trade is made by the reader. Always remember that only those in possession of their own private keys are in control of their own money. If you enjoy this type of